Hello, everybody. I think we'll make a start because I'm seeing that we're up to sort of quite a few participants already. So welcome, everybody. We're so pleased to be with you here again. I only wish times were easier for us all, but we're here to help as your Chamber of Commerce as much as we can. So please do use us. We can't do this by osmosis. If you have any question for us, please do get in touch. Right, on to what we're discussing today. At present, there is much talk of the EU, the trade deal, and the supply of goods. But one area needs addressing urgently, and that's the supply of services. 80% of London's exports are in this sector, and 45% of all our exports are to the EU. To shed light on this UK-EU trade deal, we're really pleased to have with us such an informed panel this morning. David Billingsby from MTX will be giving us a view from the city. But now over to Alan Rides, our MD. Alan is ex-DIT, and what he doesn't know about international trade is not worth knowing. On top of that, he's the most helpful and interested man I know. No query is too small. So over to you, Alan.
This is where I start blushing with all of those compliments, Sally Smith. What's going on?
The sun's shining.
You're very kind. Thank you very much. And it's my pleasure to work here at the Chamber with Sally. It was only a year, feels like a year and a half ago, that we were in Parliament getting an award from BEIS, Business Energy Industrial Strategy Department, for being the best UK company to give advice for exporting. What a wonderful day out that was. So here we are today. We've now got a trade deal with the EU. It's very interesting, I thought, that the trade deal wasn't negotiated like all of the rest of our trade deals by Liz Truss, our International Trade Secretary, the Department of International Trade. Instead, it was negotiated by the former head of our London Chamber of Commerce, which shows you how prominent chambers of commerce are viewed by the government. We're a local chamber. Please make the most of us. We'd be delighted to help anybody who asks us any questions. On that note, I'm going to do my best to multitask and screen share. Hopefully this has come up in front of everybody. Yes, I've got the thumbs up from Sally. What our presentation is today about is it's a view from the city from my very good friend David Billingsby. I'm going to talk about export documentation and freight, and then at the end of this I'm going to throw the rugby ball down the line to David to talk about VAT, the implications for exporting and importing with the EU, finance and foreign exchange risk elimination, with a few examples of how foreign exchange rates have moved. And so I'm going to talk quickly about rules of origin in the UK. This webinar is going to be posted on our website for posterity for anybody to review and have a look at if I've gone through these slides too quickly. I should also say that these slides come from a very, very helpful Institute of Export, where I'm a member and passed my graduate degree. So they're very welcome. Thank you very much to Kevin Shakespeare. The rules of origin have changed with the deal that we have with the EU. The good news is on this front page here that we've now got a trade agreement that allows anything that's of UK origin to move backwards and forwards with the EU without any tariffs or quotas. The question really is, how do you define goods of UK origin now? And that came up in an awful lot of detail in these trade negotiations. At the end of the day, that's a declaration that you have to make to our chambers of commerce for us to be able to issue with a certificate of origin. Not that you need a certificate of origin currently for the EU, but you may be asked, so be on your guard from now going forward. So no tariffs apply for any goods from the EU sold to the UK, or from the UK to the EU so long as they're origin is of an European country or the UK. I've put up a few examples of what origin is defined as, and this is where it gets incredibly complicated. Origin now is defined by the industry that the goods are going to be used in. So one example that I've put up is in the motor industry. If you've got a vehicle that is purely propelled through electric power, then the origin needs to be 70% of the ex works value to be UK origin. However, if you've got an internal combustion engine or a hybrid vehicle with an electric engine as well as petrol or diesel, then it's 60%. This type of rule has meant that Nissan have now confirmed that their UK factory is going to go ahead with manufacturing electric vehicles now in the UK for export to the EU. Scenario number 2 is, have I jumped a few slides here? Hold on, let's no, I'm okay. So scenario number 2 is for no processing of goods. So in other words, if your goods are from the EU, they're originating in the EU and they've been exported to another EU country and then they've been imported into the UK, they're in free circulation. That means that there's no import duty. The goods would have had to have undergone sufficient processing in the UK to then be transferred to be UK origin. Scenario number 2 is customs procedures. If you have EU originated goods that are exported from the EU, then imported into the UK and placed into a customs duty suspension regime, i.e. a customs warehouse, then they would retain EU status because they haven't been imported officially into the UK. They're still in a duty-free area. But if the goods come into the UK and remain in duty suspension, evidence may be provided for the EU importer. Another scenario is that EU originating goods that are exported from the EU to the UK, then released for free circulation in the UK, could be and subject to minimal processing, i.e. repackaging or labelling. That minimal processing may not be enough for the goods to be now defined as UK origin. Therefore, a tariff would apply if they would be exported back to the EU. I'll go on to a very specific scenario which is causing a lot of fuss at the moment in a moment. So scenario number 4 is if there is sufficient transformation of the goods. So in other words, the goods are exported from the EU to the UK. They're subject to processing, which means that you'd be using the imported raw materials to manufacture something to a finished product that would change the actual product itself. That would then qualify for the goods to be UK, and there would be no tariffs if they were then to be exported back to the EU. Another scenario is if you've exported a UK product to the EU and you need to bring it back for repair, to restore it to good condition or to do maintenance on it, then again, there is no duty scenario. So the principles of underpinning the origin of the trade deal are that proof may be required for importing the goods at the time when importing, or they may be imported at the time of audit, and you need to keep your records of this for a good few years. An example of a statement of origin and the criteria is it wholly produced or exclusively originated materials? Is it substantive transformation rule, or is there a use of accumulation or tolerance by value to make it UK? This is all about the suppliers doing a declaration for now, but this may change and move into more detailed declarations as it rolls forward. Here is an example of what a long-term supplies declaration form needs to look like. But there won't be anything required revealing the profit margins that people are making in there. So the key thing is, where are the goods that you're bringing from the EU into the UK warehoused? If they're warehoused duty-free or duty paid, in other words, in free circulation, that can make quite a difference. Authorization requirements for customs warehouses. This is now how this is defined, whether it's a public warehouse or a private warehouse, and what type of approvals you need. Here's the this EORI number that's required, and you need to go through approvals requirement for all of this, as you can see on the right. So there are customs special procedures and authorizations that are needed for customs special procedures and authorizations in post-transit trade environment. The benefits of suspension and elimination of duty and VAT, as I spoke earlier. But inward processing and customs freight simplified procedures are becoming increasingly popular. And you need to have a talk to a HMRC required authorized person. So here's my example. Percy Pigs. What on earth have they got to do with all of this? So, Percy Pigs are made for Marks and Spencers in the UK. They are made in Germany, and they're brought over to the UK and warehoused in one of Marks and Spencer's distribution centres in the UK, and then sold across the UK as they're English labelled. Some of those Percy Pigs, as you can see in the picture, are then exported over to Ireland. But because they haven't gone through any transformation, they've just been brought into the UK from Germany, customs cleared, and then warehoused, and then distributed on to Ireland. Import duty then has to be paid when the goods arrive on the import duty point in Ireland, Southern Ireland this is. And this is causing quite a stink. If Percy Pigs were transformed into the top layer of a birthday cake by Marks and Spencer, it would be a transformation, instead of being a sweet, into being part of a cake. And if that was the case, they would be UK origin, and there would be zero import duty allowed when they were imported into Ireland. So these rules are very complicated. They take up 50 pages of the EU-UK trade deal, and they haven't really worked out the issues yet. So we have quite a few words of wisdom here from Gary, who issues our certificates of origin in our Chamber of Commerce. I'm not going to read through all of these for you, you'll be glad to know. But I've posted them all up here for you to be able to read through after the event. The key thing is with this that as far as freight is concerned and documentation is concerned, because there are so much more added documents that need to be adhered to, the rules have changed, so you need to be a lot more knowledgeable and understand what's going on. You need to look very carefully at what your freight and documentation charges should be, which you should then be passing on to your buyer of your goods. I've seen some people have asked questions about, do you need a certificate of origin for exporting to the EU from the UK? The reality is that no, you shouldn't. You just need to declare it on a customs form when you export to the EU. But your European customer, if they're re-exporting it themselves, may ask you for a certificate of origin so that they can show internally inside the EU what the composition of their finished article is, in the same way as you've just seen what the requirements are for UK origin to be defined. Please have a good read through these rules, and please pay careful attention to Incoterms in which you sell. A lot of people have sold historically under either Ex Works at one end of the scale or delivered duty paid at the other. And because of the VAT element on EU imports into the UK from the UK, it may not be the most practical terms for you to use. So I would suggest that you choose looking at free carrier instead. In other words, you deliver them to a freight company in the UK and then hand the baton over to them to do all the rest of the work for you and for your customer in the EU, which defines that VAT can be pushed forward into the EU, or you sell on the delivered at place. Again, that means that you're not including any VAT in your sales price. Any questions, we're here to help. This is where I now hope that David has not fallen asleep with my presentation and is still around. And I'm going to pass the rugby ball down the line to David. Over to you, sir.
Thank you, Alan. Good morning. I start off by telling you a little bit about MT Express. As an organisation, we're 8 years old, and we started in the foreign exchange market because we saw a distinct gap. Most companies who deal in foreign exchange are doing it via their banks. And when they do that, very often they don't know the true cost of the foreign currency, because the fees and the exchange rates are just hidden in their bank details, and it comes up in their statement at the end of the month. So what happens is they have no clear idea of what it's really cost them to get their dollars, euros, or whatever it is. As an organisation, we've got over 100 years worth of experience spread across the management team. We work with two business partners. Our business partners are Santander and a company called eBury, who effect the electronic transfers of payment. We offer an international currency account for Forex, and that international currency account isn't just a normal account. It sits alongside your own bank account, is online, and can be operated by you, or many people actually prefer us to do it initially because they want to feel comfortable with the way it works. So the transactions are online, available for you to see at any given time. And those transactions, instead of being hidden within your bank statement, you can see what the true cost is. Typically, our cost for a transaction is 0.5 or half of 1%, no matter what the currency. And talking about currency exchanges, the slide that Alan's just put up now shows the way that the pound against the dollar and the pound against the euro, the way they have slid. There is either a 17 or a 12% variation across the year in those currencies. MT Express, through the global currency account, can enable you to forward set a rate, and it will be at the rate on the day that you set it, but you can set a rate for up to 5 years. You can forward set it for a month or 2 months, because that rate may well change and you want to take advantage of a better rate at the time. So you just step out of that and then reset at the newer rate. For you to use this account, there are no fees, there's no membership, there is no costs, there are no hidden costs at all. All you have to do is apply. You can apply via the website, you can give us a telephone call. There is an approval process that you have to go through. We obviously have to make sure that everybody is financially stable to do it. But we can set it up for you. It doesn't take long. It's a matter of a couple of days. And then you can set your currency account. And it's not just a Forex account. You can also make and receive payments through your account. If you're transacting business regularly in a given country, we'll take the US as an example. You can set your currency rate, but having done that to pay for things that you may be importing, you may also be for exporting, you may also be importing. If you're importing, you can pay in pounds and it ends up being translated into dollars for your supplier at the other end. Conversely, if you're bringing goods back this way, you can ask for people to pay you in their local currency. It ends up in dollars in your account. Typical cost 0.5 of 1% again. So it's really very, very simple. I can take questions on it later. One of the things that we have to do, obviously we're FSA regulated, so we have to go through a compliance process when dealing with all of this. But the other thing that we offer to businesses is we offer a trade finance option. Right now, things are getting more difficult for people to both import and export because the cost of transacting business has gone up. VAT alone, some people are having to employ VAT consultants. Some people are employing customs brokers to assist them with their business. If you have that sort of increased cost in your business, you may well need some additional finance to help you through for a period of time. You may also be in a position where you're buying product from overseas to bring into this country to process or to be used in manufacture. Typically, people are buying things like electronic chips and electronic parts to be processed. It could be steel components being turned into a whole product to then be re-exported. You have to pay for that before you in turn invoice your client. That can lead you to a cash flow crisis. And if that is the case and you need, if you like to think of it as a bridging loan to help you through, you can apply to us and we can review the situation and see if we can assist you. Typically, we can work in relatively small amounts, 10 to 15,000 pounds, up to 50 million, depending upon the company. Naturally, the company has to be sound and have a good track record to get large amounts like that. But the payment, the transfers are all done via our partners, either through Santander or through eBury. Obviously, when we're dealing with large amounts, it's not a quick process because we want to get the best deal that we can for you via our partner. So we will sit down and we will discuss a tailored one-off solution for you. Because right now, there are many things that are impacting the cost of you transacting your business. So with using a combination of both the global currency account and trade finance, you can hedge against excessive rates on Forex. You can fix a rate so that you are able to forecast what your business is going to cost you going forward. At this point, I was once told you should never apologize during a presentation, but I'm going to. The presentation this morning should have been given by our CEO, Richard Quantrill, who unfortunately was taken to hospital last night. So what you have is MT Express Light with me this morning. I've skated through it quite quickly, but hopefully I've given you a taste for what it is that we do. I'll summarize it. What we can offer you is market-leading rates on foreign exchange. We can offer you the ability to fix your rates so that you can plan your business. We can assist you with trade finance, and that trade finance, really don't think of it as a regular loan, it's a bridging loan. And it's a bridging loan to help you get through the difficult times that we're experiencing currently. And if Alan wants to move the slide, we can then go on to questions.
Guess what? I'm talking while I'm muted. That's not a good start, is it?
No, not really.
I wanted to come back to the slide that we've got on the page and go into VAT in a bit more detail. And I'm going to wind back to VAT on exports because it's the the simpler option to deal with. And perhaps we can deal with this as a point of discussion more than anything else, David. So VAT on goods that you export to the EU that are UK origin is quite straightforward. If you're exporting as a UK entity, your UK goods, you do not charge VAT if your goods are exported from the UK to a destination anywhere outside the UK, or to Northern Ireland to a destination outside the UK or EU. We're not in the EU anymore. That means no goods are in free circulation with the EU as far as VAT is concerned. This is simply an export of goods from the UK. So long as you can zero rate the sale, you are the one who has to keep the evidence that you have exported the goods from the UK. You need to keep that for a period of time, and the goods need to be processed through for export. And the key thing of all of this is that you don't deliver the goods to a freight forwarder for somebody else to export. In other words, you sell free carrier or free point or Ex Works in the UK, or even FOB, free on board a vessel.
Mm-hmm. Yes.
You actually have to be the one who has delivered them to an address outside the UK. Therefore, you are shown on the export document, be it an airway bill, be it a road haulage document, be it a bill of lading, that you are the shipper, you are the exporter, and there is an overseas address on there where the goods have been delivered to anywhere in the world, including the EU, which is now an export market. And on proof of that document, the goods will then be zero rated. Okay. Now comes the complicated bit. When you're charging VAT for services, services in London equate to about 80% of what London exports. And the UK exports 45% of its products to the EU. Therefore, it's the vast majority of what London exports to the EU would be services. And this is what's caused a lot of issue with the city especially, and just general exporters who export their services. Because the trade agreement that's been done is a trade agreement for the export of goods, because that was the simpler part of the deal to be done. And my God, that took a hell of a lot of negotiating to conclude. What they've done is they've kicked the can down the road a little bit, giving them a bit of time to finalise how they're going to negotiate services. And the services are being negotiated as we speak and are due to be completed by the end of March. But that hasn't been in the news. So where do we stand at the moment with VAT on services? And that's quite straightforward if you apply the same rules as you do for VAT on goods. And the rules are that if you export your services to a company in Europe and you deliver those services in the UK, then you are not performing any service in the EU. Therefore, you do not charge VAT. However, if you're delivering those services in the EU, then you need to charge the VAT for that EU country. The rules say, but for some suppliers, you may need to register an account for VAT in the country that you're supplying. You must check the tax authority of that country to find out how to treat your services you're supplying. And a list of VAT contacts can be found, and there's your link for it. These are pages off the gov.uk website, which needs some reading. So if the place of supply of your service is not in the EU, you do not have to charge EU VAT. But you should include in the sale box 6 of your VAT return that that's what you've done. Do you have anything to add on to that, David?
Yes, just a little bit, Alan. It's a very complex subject, and neither you nor I, fortunately or unfortunately, depending upon your view, are qualified VAT advisors. There are very good sites that you can go to that are government websites, but also there are two organizations that will give very good advice. One is a company called Avalara, and I'll spell it Avalara. And if you Google them, you'll come up with their website. They give advice on VAT and duty for exporters. There is a gentleman there called Richard Asquith, who in one of their recent webinars has said that if anyone cares to contact him, he will give free advice on VAT for exports. So please do take a look at the Avalara website, and if it's the same one that came up for me on the last 2 days, you'll find Richard Asquith's name there, but it's richard.asquith@avalara.com, and he will give you free advice on VAT if what you seek is a little more complicated than you can get off the internet.
Okay, so what I'm going to do is move on to the Q&A section section that we've got, and I can see we've got a few questions. One of them is from Kathy Oliver, and she says, we import goods from the USA and we fire rate them in the UK. Are they then UK origin goods? I would say, Kathy, from the definition that I've shown on the previous slides, you're not changing what the product is. It's still fire rated product that you're importing, and all you're doing is adding your certification, your rating to them. You're not transforming the product itself. So therefore, I would say that the origin for that is not the UK under the rules that I've defined earlier from the Institute of Export. The second question is from Saraf. What is customs procedure for exporting UK origin goods by truck to outside the EU via the EU? So what you need to do there, Saraf, is you need to contact your freight haulage company, who will be used to using a trucking service for taking goods, for example, from the UK to Turkey, that will have to travel via EU countries, and you will need to have transit documents that would be prepared by a customs expert or a road haulage company or a freight forwarder to take those goods on to that final destination. Kathy Oliver has put another question in. Should I be opening an IPA for onward shipment to the EU? Any ideas on that, David?
Not right now, but what I'd like to do, if you can pass on Kathy's contact details to me, what I'll do is I will investigate it and I'll get an answer to her within the next 48 hours. Well, it'll be Monday now. I'll get an answer to her by Monday, because as I said, I'm not Richard, I'm the commercial arm rather than the banking arm. So I'll undertake to get Kathy an answer to that. Okay. If you can forward on the contact details to me, Alan.
The document that people normally use would be an IPR, inward processing relief.
Yeah.
For shipments that come in to the UK for export on immediately to another country. And that is something that you could get, therefore, if you're bringing the good, or something that's beginning to be a bit more of a hot topic, and that's the establishment of free ports or free trade zones in the UK. Heathrow are applying for one, and to be the major one in the UK. Heathrow, as we know, is the largest port by export volume in the UK. And you'd be able to import your goods, warehouse them without them becoming duty paid in the UK. So they'd be in a customs bond or in a free trade zone, and then you'd be able to export them onto the EU without having anything, without paying any import duty in the UK. So maybe that's something you should look at, and we can correspond a bit more on that, Kathy. You've got my contact details off our website, and David and I can investigate that and come back to you a bit more detail. Kathy Oliver's put in another question as well. We like you, Kathy. Am I responsible for VAT into the EU? As the answer to the question earlier, it depends on your payment terms. If your payment terms are delivered duty paid, then you would be responsible for charging VAT to your customer in the EU. But if your payment terms are without, your Incoterms are without import duty being paid on them, so Ex-Works, FCA, FOB, then DAP, then that would not include VAT when you're exporting to your European clients. Anything you want to add on to that one, David?
Yes, if VAT is involved, Alan, it's the vendor's duty to appoint a VAT agent in the country that the goods are being sent to.
Right,
so
okay.
They would need to have somebody handling their VAT in that country. I guess one of the ways they could do it is by asking their client to handle it on their behalf. No doubt there'd be a cost involved, but that would seem to be the easiest way rather than trying to find a VAT agent in that country. I also guess it would depend upon the strength of the relationship. If there's a good relationship with the buyer, then they will have VAT processes in hand, and they may well be able to handle it for you for a nominal.
So I'm going to try and thinking it through answer to Kathy's earlier question. If she's importing goods from the USA into the UK and then exporting some of those goods from the UK into the EU, I would say, Kathy, that you're probably having to pay VAT when you import those goods from the USA into the UK. Then you're not able to charge VAT on to your EU customer. What you are able to do, though, is on your VAT return show that you've exported the goods out of the UK, and therefore you can claim back the VAT that you paid when you brought the goods in. And that's probably the best way forward for you. Kathy's also asked, are EU sales zero rated as before? And the answer to that is yes, from the previous slides. Okay. Sue has asked the question, customers of mine ship UK manufactured garments to the EU, and he's paying duty and VAT so he can retain his customer in the EU. These should be free of tariff. What can he do to reclaim the duty he's paid to the customer? So, David, David's having a glass of water. I'll answer this one.
No, please do.
Okay. So customers who export UK manufactured goods to the EU, if your Incoterms are delivered duty paid, then you would be paying that all of the import duties and VAT for those people. And under a VAT return in that country in Europe, you are able to claim that money back via a customs agent, a VAT agent in that country that you need to have an arrangement with. So here's a question perhaps a little bit more for you, David. It's from Dominic Turnbull. I run a UK limited company and I'm a designated member of a UK-based LLP. The LLP does the invoicing to the EU. What changes do I need to consider or prepare for?
That's not really a Forex issue, is it? It's that's a commercial issue, Alan. And as a person who deals with Forex and trade finance.
Sorry, Dominic's just added an extra comment onto the bottom of that, saying his company exports services. So perhaps my slide that I put up, which was a copy and paste from the uk.gov page, showing that if your service is delivered in terms of a lecture or in the UK or online, you're delivering that, which you would be in currently, while sitting at your desk in the UK, then you would not charge VAT to your European customer. But if you physically went to Europe and delivered that service in their offices, then you would need to charge VAT. Does that sound a sensible answer to your side, David, as well?
It does, from the slides that you put up, Alan. Yes, as I said, it's not really a finance issue as such, but based upon the gov.uk information, it sounds like the right answer, Alan, because as you say, if the service is delivered from here, if it's a webinar like this morning, or it's advice over the telephone or whatever, the service has been delivered here.
Exactly. The service has been delivered here, and you're charging somebody overseas in Europe, but you're delivering the service from your desk in the UK or your phone or your Zoom call. Okay. Dominic, if you've got any more questions on that, please contact us and we can refer them on to David's VAT specialist, who answers those questions in more detail, free of charge.
Well, he's not my specialist, he's everybody's specialist, Alan.
Yeah, no, the one you've referred to, though. Earlier.
Yeah, Richard Asquith from Avalara, yes.
Right, perfect.
In fact, Alan, may I suggest that what I'll do is I will send you the details of Richard, and because he and I have nothing to do with each other commercially, he's just a person that has offered this service. I'll send you the details, and people that have a VAT issue that is beyond our solution this morning, they can email him, and I understand that he responds within 48 hours.
I have put his contact details in the chat box. Okay.
Wonderful, thank you, Sally.
No
Super
worries.
efficient, Sally Smith. Well done, Sally. Thank you. So Debbie Leon has a question. So she's saying, the amount of extra value is no longer relevant for determining the country of origin. Are any percentages relevant at all? So I think, Debbie, on my previous slide, I'll try and skip back to it. I'd said that the criteria for origin is whether the goods are wholly obtained or produced in this country, B, use of exclusive originating materials, a substantive transformation rule, or use of accumulation or tolerance by value. The tolerance by value rule here applies. So yes, there is, it does make a difference on the value of the goods, but also, and here's the catch-22, that it depends what industry you're talking about. So if it's in the car industry and you're looking for a electric powered vehicle, that value has to be 70% UK origin. If it's a hybrid or a internal combustion engine, it's 60%. So the rules have become very complicated. It all depends what product sector you're in. Another question, this is a good one, David, we can answer this one. Are
Good.
goods
That money,
sold?
I'll try.
Are goods sold to Northern Ireland from the UAE or from the UK VAT-able?
You know the answer to that.
Well,
because the Northern Ireland is still part of the UK.
exactly.
Or it
It's a
was this
domestic
morning.
UK sale. Yes.
Yes.
Therefore, you should be charging UK VAT, and you may find that you need to have a special Northern Ireland VAT number, a bit like an EORI number that is VAT for chargeable around the Northern Ireland because of its status. Rob Kens has asked, we have equipment from a customer in France for repair, which is now completed, and they're requesting it back as soon as possible. So again, my previous slide about importing goods for repair in the UK or upgrading. I'm trying to look for the right slide at the moment. Here we go. So if the goods have been received in the UK, they've been repaired to the product and good condition, or to maintain the product, then you can do that and there isn't any duty that's payable. We're doing well on questions this morning. So EU originating garments imported in GB and then re-exported to the EU, does this attract import duty in the EU? So if the UK, when you import them into the UK from the EU, you need to transform the product. You need to do some work to it. If you don't, and you're just importing it in and then re-exporting it out, in the situation of our Percy Pigs, currently Marks and Spencers are experiencing, then you would have to charge, or you would be charged import duty back into the EU. And that is a bit of an issue for a lot of people, and there's negotiations going on to frankly rectify that situation, which shouldn't be the case. What do we, again from Rob Cairns, what do we need to do to complete regarding new paperwork apart from our standard delivery note? Can we on DHL to sort this out? Yes, you can. DHL are an authorised customs entity used to dealing with these type of customs documents all the time. The rest of it is rely on DHL. Yes, you can. Are you seeing any of these questions, David, or can I read them out?
No, I'm not seeing questions. I'm just listening to you read them.
Okay, all right. So Peter Buckley has asked a question here, and his question is, will customs warehousing need to be increased around Heathrow as a result of these new procedures, or is it just a matter of segregating existing warehousing? Warehousing at the end of the day is built on supply and demand. And as Heathrow will return back to normal, that warehousing will have to change and be fit for purpose of what the new purpose and volumes are going to be going forward. So we'll have to see, but I'm sure Heathrow does have more than enough warehousing space around it, and once it gets approval to be a free port in the UK and a free trade zone, then it would be able to increase its existing warehousing to suit. Kathy Oliver's asked, will there be a EU VAT return form as previously? Or is this covered by the EU client? So for EU VAT, if you charge VAT to your European client, on goods, then you need to be registered for VAT in that country in the EU. It does get to be very complex in this issue, and that's exactly the reason why Sally's put in the chat box the information of the VAT specialist.
If I could just interrupt for a moment, there is another website run by an organisation called SAGE, S-A-G-E, that if you go on that, there is a wealth of good information on that as well.
Yes. Debbie Leon has put on a very good point here, and I must admit, through personal experience, I can tell you that she's absolutely correct as well. And her point is that the issue that seems to arise in reclaiming VAT from some EU countries is that they hold on to your money for a long, long time. The VAT office in the UK is incredibly fast and efficient. You put in a VAT claim for claiming your VAT back. You get it back in a check immediately. There's no hanging around. In some countries in the EU, I know that they can balance off what VAT you're trying to claim back at the end of the year with their tax that they want to charge on your local company. So it can be quite a long drawn out affair. Chris Durkin has added a question in here, which I'll read out. Just a thought. Okay, it's a thought, not a question. Can you stress that the chamber can help with any problems? The reason I say this is because you are both saying how complicated the subject is, and we don't want to put people off exporting. What a good point to make. You're absolutely right. If you've got issues with exporting, and as Harold Macmillan once said, exporting is fun. You should send them over to us, and we'll get the right expert in to expertly answer those questions for you, and give you the way how you can proceed forward without any headaches. However, when rules change in the way that they are at the moment, and they're continuing to change because the agreement that we have isn't a finite agreement, it will continue to evolve, to improve. And then you'll have all of the wrinkles smoothed out in the procedure. But for the time being, we have wrinkles. Don't we have wrinkles, David?
I certainly do.
Okay, we're doing quite well. Oh, Chris Durkin said thank you. Our pleasure. Daniela Gluck has asked the question. Forgive me, she says, if you've answered this, but we make all of our clothes in the UK, but our fabrics are imported from China. What is our VAT situation? Okay, so that's quite straightforward. If you import your goods from China, you'll be given a bill for your VAT by customs when the goods come into the country. When you then export your goods out of the UK, so long as you are the exporter and shown on the export documentation that you've exported them in your company's name, then you can claim back all of that VAT. That's quite straightforward. Would you agree, David?
Yes. Not a banking issue, but yes.
Okay. Just a straightforward exporting issue. Absolutely. Again, David has referred us on to a VAT specialist that he knows doesn't have any agreement or reference with.
None whatsoever. I have just participated in their webinar, and in the printed out record of the webinar, Richard Asquith, who made the presentation, said that he was happy to take all and every inquiry that was sent to him.
Okay, great. Daniela Gluck has said that's brilliant. Thank you for the last answer. Vikram Singh has said are UK bound goods from a free port zone subject to VAT and vice versa? So any goods that come into the UK, I have to pay VAT, no matter where they come from. And whether they're from a free port or a free zone, they're still coming into the UK as the UK domestic market. If they were to come into the UK and be held at a UK free port or free trade zone, then they wouldn't be charged. You wouldn't be charged VAT because they're not in free circulation in the UK. Okay, Sally. Is Sally Smith there? Calling Sally Smith.
Yes, I am.
Hey!
I am indeed.
We've answered all of the questions that are on there.
Yes, I have.
Woohoo!
There is one in the chat box which comes from, hold on. I did see it. It was from Prashant, and he was asking whether anybody could recommend an EU VAT specialist. But surely it depends on which, is there such a company that does general advice for all EU countries? Surely it would, be a specialist for each country.
Again, I would suggest contacting Richard Asquith.
Well, he's getting a good plug, isn't he? Yeah,
He is.
absolutely.
He should be paying your chamber's commission.
Yes, I think I will contact him. Yes, okay. I think that is a good response. What are you up to now, Alan? You seem to be sharing your screen, but it's gone now.
Right, here we go. I'm getting out of sharing my screen. Yes.
Okay, well done.
So we've done well. We've answered lots of those questions. Thank you, everybody, very, very much for coming on with those questions. Any more that people can think of afterwards, let us know. I can see that David and I have managed to grow some hairs on our chinny chin chins just for the new year. Jamie's going to tell me he's had his for a long time now, aren't you?
5 years.
Okay.
Yeah.
David, just out of curiosity, do you know the questions that are going into people like DIT? Are they mainly focused these days on things like VAT, or is the main sort of volume of questions on other issues for exporters at the moment?
I'm given to understand by our ex-colleagues that it is mainly VAT, inward processing, and duties. And I think the questions this morning, are just fairly typical of what they're having to deal with in DIT. They're just being inundated, and as you rightly said this morning, it's still a movable feast because the agreement isn't finite. And so as such, we can expect to see some changes in one or two areas.
Sorry, Sally. So what's interesting is when you're exporting a product, you generally tend to ask DIT a question about exporting. If you want to account for a product or charge VAT, you should really ask a VAT specialist. And now we've got one. Thank you very much for the tip, David. When you're looking for finance, you should go along to a bank or a financial institution. Or
you should come to us first.
Come along to David Billingsby about your foreign exchange.
Not me.
The point is, there's horses for courses in this world. If you want to know about certificates of origin, please come along to us, the Chambers of Commerce, because we're the ones who only can issue certificates of origin to people. If you want to know about VAT, go along to a VAT specialist. They're the people who have really got the qualifications to answer those questions. We can refer you. Please feel free to come to us. If you want to know questions about exporting goods, finding clients overseas, come along and talk to us or DIT. They can help. If you want finance on or foreign exchange risks, come along and talk to us or MTX. We are the experts in that field. We can help you as well. Sally operates a free of charge signposting service with a big smile on it as well. So if you want a central point to ask those questions to and be referred to the right experts to answer them, come along to your Chamber of Commerce. That's what we're here to help with. And especially in changing times that we're in, when the rules are changing and they're constantly evolving and nobody's quite sure if what worked before Christmas worked in January, I can tell you what works in January and February will change because they've been negotiated and something different will work in March. So keep that dialogue coming and talking to us. And that's the key message I'd like everybody to have as a takeaway from today, with another key message, and that is you should show your appreciation and thanks for David Billingsby coming along and stepping up to the plate at last minute notice for Richard Pontrill, who's currently in hospital, who we share our thoughts, love and warm wishes to, and a speedy recovery. But enormous thanks to David for coming along today.
It's my pleasure, Alan. Always is.
I can almost see you blushing.
Almost. Thank you for the opportunity, and I'll just reinforce the message that if anybody has a question regarding finance or foreign exchange, they can look on the MTX website. That's MT Express, no E in it, MTXPRESS. Have a look on the website. If you have a question, you can go via the portal, or you can email us, and you can talk to us about any matter surrounding funding or foreign exchange.
I can also tell you that in the chat box now, you've got 8 different thanks with enormous appreciation, and what excellent presentations they were on the page for everybody to see. Thank you very much for that feedback. Positive feedback is always welcome. Negative feedback is a challenge for us to improve. So we look forward to doing lots more with our audience out there, and it's really good of you all to come on board today. Thank you all very, very much, and especially to you, David, for stepping up to the plate in such a good way as you've done.
My pleasure. Thank you very much, everybody.
Okay, have a good Thursday. Thank you, everybody. Bye-bye.
Take care. Bye-bye.